Good morning, ladies and gentlemen. Thank you very much for coming to listen to me today. I'm deeply honored and delighted to be here. I'm going to talk to you a little bit about circularity with a main focus on recycling, with the benefit of some knowledge that I've picked up over the years, and to give you a view on that. I'll let you read our disclaimer at your leisure. Please allow me first, in return for sharing some wisdom, to give you a bit of a pitch or a plug for my business, Verdigris Strategic. So Verdigris has two main pillars to it. We are a long-term investor. We have a pool of committed capital that we're looking to deploy into the metals and mining sector, mainly into brownfield opportunities. We are fairly metals agnostic, and we'll look at a full range of opportunities. Focus geographically is on Europe and the US at the moment, but hoping to diversify away from that. We have a team based in London and a team based in the Middle East, mainly the technical team based out of Dubai, and a financial and strategic and operational team based out of London. The other pillar to our business is business transformation and strategic advice. And we're very fortunate to have a number of our clients here today. We advise a broad range of metals producers, proper soup to nuts approach in terms of mining through to rolling, refining, extruding, and all added value. So our door is wide open for investment opportunities and for the advisory function. So what I want to talk about today is something that I'm very driven about, which is circularity in metals and mining. It's a pretty broad topic. I'm going to talk a little bit about what I consider to be the main drivers for it. And the reality in talking today is about more to do with capital allocation for this sector. I want to talk about what I see as the core principles, but then allow me a sort of a cri de coeur, a passion cry for everyone at the conference today to take some lessons learned from how Europe, I would argue, has messed up the circularity argument. And I'll put some data out there as to why I think that is the case, and hopefully make that case, which is an interesting proposition. For a bit more information on what I'm talking about, this article is in the FMF magazine. I haven't seen any today, so maybe it's sold out. But I'm sure somewhere today amongst the conference is the FMF magazine. Maybe it's an online version. But I wrote this article, and on the back of the article, I was asked to do this speech about circularity. So that's a bit of context. The reality is the way that we view circularity is a movement from mining of old, which was this take, make, and dispose model, to a more evolved way of looking at metals in the economy, in the political situation that we are in, and looking at a more enlightened view of reevaluation, recycling, repurposing, and reusing. So looking at that in terms of the flow, resource conservation as a competitive advantage. Well, the resources that we have, the resources that all of the companies here today are excited about, are finite in terms of what is in the Earth's surface. But I would argue that the material that we have mined and refined and smelted and moved forward into the material that we need today is an infinite resource. This is a material that we can, for a lot of materials like aluminium or steel, there is an infinite possibility to recycling. So what is it imperative on us to do? We need to drive innovation. We need to move forward product design and manufacturing so that we can reuse materials in the space of the operating environment. We need to look at environmental and corporate leadership amongst the leaders that are here today. But in terms of what I'm talking about today, in terms of capital allocation, the two things we talk about on the slide here, the economic implications of circularity, and then unlocking new revenue streams from this focus. So economic implications of circularity are price-driven in terms of the metals that we're processing, and they're terms of OpEx-driven in terms of how we can make the process of recycling more efficient. Unlocking new revenue streams, well, the term urban mining was something very trendy a few years ago. It seems to have died out. But actually, I think urban mining is probably one of the most exciting things that we have. And no one here, as far as my walk around of this rabbit warren of presentations, is focused on this urban mining. So, in terms of the investment case for circularity, I'm going to give you a few slides that talk about why I see it as vitally important. The reality that there will be price drivers, there will be movements in demand, and there will be movements in markets and the need for domestic and local markets as we analyze this. You'll see this sort of slide, I think, very often in what people are presenting today. Robert Friedland has a much more enlightened version of it than I have here today. But I'm trying to capture a few more metals than he does with his focus on copper. What we see here is the demand gaps that are forming for all of the critical materials, and how our view out to 2030 and beyond that highlights these critical shortages. The most evident one, I think, is in copper, as you see a 20% shortfall in what we have. But the reality is that aluminium is perhaps more important, because there are 3 times more tons of aluminium consumed and demanded in the developed economies. So I think the focus here in terms of recycling has got to be on the products that we are most advanced in the ability to recycle, but also the demand for those materials. So again, reinforcing this point, I picked up some data from the IEA. And there are 3 different scenarios that they talk about, and they talk about them as to how realistic they are, whether they are political ones or they are economic driven. So starting with the political ones, we see a critical materials demand expectation of growth of between 2.2 and 4x. So let's look at that. We are consuming these materials, and we are saying we need more of them, and there are a bunch of miners in the room today that are going to produce a huge amount more of them. But there's still going to be a massive gap in terms of what we need versus what we have. So the other driver of circularity, and particularly when we look at today's presentation about capital allocation for circularity, is the price driver. So we in the metals and mining world have spent a lot of time obsessing about how things are moving, how things are incredibly exciting. And I hope you can see the different color scheme here, top to bottom in terms of copper, nickel, and aluminium. This has got to be a situation in terms of what the miners are going to be very excited about, but also what the recyclers, what the reusers, what the re-evaluators of this metal situation should be excited about. Declining ore grades for these key commodities are moving prices up. But actually, the ability to have an equivalent ore grade in terms of recycling is incredibly exciting. If you went to a plant where they are macerating copper wire and taking that copper wire away from an old car or an old factory of some sort, you're looking at copper wrapped in a plastic or rubber insulation. That is a 70 to 80% copper product. You compare that to the average and most exciting copper mine that people are talking about today. the numbers are fractions of that. I'm not going to talk about any specific ones, but this has got to be an exciting opportunity when the prices are going up and all grades are going down, but the recycling opportunity is becoming more prevalent. However, we are looking at an environment where the miners will talk about the gap in terms of announced investments to lift production numbers, and what I call here the investment gap, what needs to happen further. Now, what I mean by that is that there is an investment program that mining groups have talked about to expand production. There is the demand gap that I talked about a few slides earlier, but there is a huge gap going forward in terms of the difference to that. So how will we fulfill that, and what will it mean? Well, hopefully Economics 101 would tell you that it means a price increase, but there are other ways to address that. It's not just in processing lower grade material, but it's becoming better, more enlightened in terms of the evaluation process of the recycling opportunity. So when one looks at circularity, there are four key areas that I would highlight today are important in terms of evaluating the opportunity for capital allocation. Looking outside at the big trucks, there is a much more enlightened view as to how long those trucks will work for now. Going back to my earlier slide about take, make, and dispose, these trucks have the ability to have one chassis that will be recycled. You don't need to bin the whole truck and rebuild it. You have an opportunity to reuse that truck, whether a railway truck, whether it's a big digger, whether it's a front-end loader. So I think having the ability in product design to reuse key items of equipment is going to be very important. And that leads on to the next one in terms of product lifespan. So reusing the opportunity and making sure that asset is not something that you buy a new telephone and you dispose of it in 3 years' time. You are buying a key item of equipment in the mining and metal space, and you are looking for some form of eco-design with repairability and initiatives to move it forward. The third one is material recovery. So recycling has moved forward in leaps and bounds over the last decade, but particularly actually over the last 5 years. I was in a recycling plant about a month ago looking at material from cars that have been crushed and macerated and moved forward. And the ability to separate the ferrous material, the steel material, to the high calorific value material, the plastics, to the copper, to the aluminium, is amazing. And that's on scale. There's plenty of new technologies that are looking at really exciting opportunities for gold and precious metals in old computers. And that's a very niche focus. That's a fairly easy thing to do on a small scale. But actually doing it on a large scale is, and always has been, a tremendous challenge. But actually some of the optical and air sorting, some of the X-ray sorting, some of the gravitational sorting technologies have moved forward. And in terms of capital allocation, I would really encourage anyone looking at investment opportunities in the recycling world to think long and hard about some of the recycling groups that are growing up and have the ability to capture that technology and really capture value from what they're looking at. The one thing I'd say is deficient in terms of circularity, and we'll come onto it in a bit more detail in less wordy slides than these, is the provision of capital. Now, from a governmental perspective, there is lots of movement from government to bridge or level the playing field to allow people to recycle and move material forward, and to scale up these circular practices. But in terms of unlocking new investment opportunities, I don't see an excitement here today at this huge metals and mining conference about this urban mining process, about recycling, and about circularity as a whole. The reality is that mining projects are seen on a scale of infrastructure. They are massive opportunities in terms of job creation, in terms of added value, in terms of GDP growth. Recycling opportunities are not yet seen on that same lens, and I think they must be. And the example I'm going to use on Europe is somewhere where I think we've had a missed opportunity in that respect. So, I know it's not strictly relevant to the Saudi conference today, but hopefully I will present a case study on what has happened in Europe over the last 2 or 3 decades as almost a cri de coeur, a passion call from me that it shouldn't happen in other developed economies in terms of the use of materials and the recycling of those materials. I'm going to focus on aluminium because I've got the most data on aluminium. There's some other examples in steel and other relevant materials, but forgive me on focusing on aluminium for the moment. So what do you need as key ingredients for this green metals circularity focus? You need a plentiful supply of raw material, and that raw material, when you're looking at the circular economy, is scrap. You need a plentiful supply of low carbon energy. And that is something that Europe has been a leader in terms of developing, sometimes to the cost of that industrial economy. Low carbon energy is vital for this. But there are 3 other things that are more upward pressing. 1 is the technology required. 2 is the market for that material, and perhaps a premium market for that recycled or circular material. And 3rd is the the logistics to cope with it. So the collection of scrap material, the ability to house and move that material in a safe and friendly environment, and also linking logistics and markets, that people want to see that circular economy happening on their doorstep. So a bit of scene setting here. The chart you see is what I've defined as global primary aluminium production. And what I mean and how I measure primary aluminium production is smelted aluminium. So the global share of smelted aluminium in 1992 held by Europe was about 20%. It's now about 5%. The global production of aluminium in that environment has increased by 256%. So you would think that over that 30-year period, there would be an exciting opportunity for Europe as the producer of 1/5 of the world's aluminium to be continuing to do so on a profitable basis. But no, it has seen a very significant decline. So looking at that decline on, again, 2 different measures, the number of active European aluminium smelters has decreased from 23 in 2002 to 11 this year, probably lower than 11 actually. I struggle to think a knowledge of 11 smelters that are operating in Europe, but that was the most recent data I could give. I think some of them are more on the fringes of Europe. So we see on the right-hand scale that number of smelters, and on the left-hand scale in terms of total EU aluminium production. This is a collapse. So if you have a collapse in aluminium primary production, surely you should see something else in terms of secondary production. Particularly because demand has been very strong. Now, we have seen in Europe a 190% increase in aluminium demand over that same period, 190%. But if you look at the right-hand chart here, you'll see that 9% of primary production is a very telling number. It is the collapse we saw on the previous slides, whereas total recycling has increased a bit, but nowhere near enough. Where is the big increase coming from? It's coming from a trebling of imports. So this is a very depressing picture in terms of production collapse and recycling not picking up. You compare that to steel as a good comparison from aluminium, whereas we've seen aluminium production decreasing by 67% in Europe, you've seen steel production only decreasing by 6%. One would argue that primary production of metals is going to decrease in a high-cost environment. So I think 6% is probably a representation of that, but not a 2/3 collapse in one materials production. So this is quite an interesting data set, and let me just unpack it a little bit. So the first chart here is showing that if you are moving your primary production away from a low carbon environment to a higher carbon environment, you are arguably offshoring your carbon footprint. So the production of aluminium in Europe at the 11 smelters or so that are still operating is 6.7, whereas in China it's 20. If you recycle that aluminium, you're fractioning that to 0.5. This has got to be a compelling advantage to moving Europe forward in terms of that primary production or in terms of recycling. So you then look at the second chart here. 93% reduction in emissions if you're recycling. Again, a very compelling argument to the growth of recycling within Europe and doing this within the EU 27 countries. Then looking at CO2 emissions for primary aluminium production relative to recycled aluminium. It doesn't feature obviously on the right-hand scale, but again, I think the numbers are highly compelling in terms of the argument we're trying to make. So we're building up a case here that says we should be doing more circular aluminium production in Europe. So what happens to the aluminium that we are producing in Europe? Where is it going? It's quite a hard data set to capture. Most of that production is going to India, a huge amount to Europe's neighbor in Turkey. And depressingly, if you look at the only data set I could find in terms of what European aluminium is publishing, in 2021, we imported 6.4 million tons of aluminium, whereas our export numbers are considerably higher than that. The number there is, I think, slightly misrepresenting the total number because you can't capture this data. It's a large amount of it is under the radar. So if that number is being underplayed, why are we moving that material overseas? Why are we offshoring that carbon footprint? And that comes back to my real point about the reliance on that import environment. And where is the need for capital allocation, the main topic we're talking about today? It's what I would describe as the melt margin. We are trying to make a profitable picture for aluminium. We're trying to make sure that there is a non-reliance on imports and trying to make sure that we can profitably melt the material in the EU. So why do we focus on aluminium? I told you there's a demand gap. Why is the demand gap? Because aluminium is absolutely critical to the green transition. And if you look at any forecast demand picture for aluminium, whether it's in the transport sector, whether it's in construction, or whether it's in other, you will see a very large demand growth. Here we talk about semi-finished products, 12.7 million tons to 17.5 million tons. The other thing that is important for industry to note in terms of the need for circularity or the importance of circularity is an impact to local supply chains from global macroeconomic and political factors. We all know very well that the Baltimore Port Bridge collapsed the supply chain in the US for a long time. We've got complexities in the Red Sea. We've got the Panama Canal having water. These are all minor issues in terms of the global supply chain, but really important when you're talking about local factors and an increased focus on what should be a domestic picture for circularity. So, going forward, we talk about something called the aluminium drain, but the reality is it could be the copper drain, it could be any other metal, and we are increasing the importance for that need of circularity. Aluminium consumption going up, the 40% increase we see in that. Primary aluminium in that domestic or local economy of Europe coming down. Recycling is not keeping up, and that material is being exported and recycled somewhere else, and we're buying it back as a finished good at a higher price. So, lessons learned. What can government to do about this? The European plan, the Critical Minerals Act that was put in place, looks about various measures, 10% for extraction, the zero mining in Europe. We know that. In terms of what processing is done within Europe, they are expecting 40%, it's only 23%. Recycling, they actually talk about a very exciting number, but it's mainly used beverage cans, not enough for construction and transport. Reduced reliance. This is a bit of an abstract here, because 70% of the material that is smelted in Europe comes from Guinea. So let's focus on the recycling angle. Under the Critical Raw Materials Act, there is a process of education. There is a consideration of tariffs. Can we limit the export of scrap to make it more economic by tariffs to be recycled locally? This is definitely an area that needs more prioritization. It's definitely an area that needs more R&D. But and improving scrap quality with programs like the Deposit Return Scheme in Europe are good initiatives. But the reality is it does need more financial support. The question is, does that financial support merit the investment? Well, again, this is a program where government needs to level the playing field. I'm not going to go through them in enormous detail because I'm conscious of time. But the current situation is depressing. EU legislation is not going to change that from what is currently on the table. However, we are in an economy, we are in a political situation here in Saudi where things are different. You know, the government is trying to actively encourage investment opportunities in recycling. I found this on a number of occasions in terms of what the kingdom is trying to present. This is an opportunity that Saudi Invest presented a few years ago, where they're talking about support for a brand new scrap recycling plant, 120,000 tons, with an expected IRR of 49%. That is a compelling investment in circularity. This is something which I would encourage everyone looking at investment opportunities, is evidence that there is government support to avoid the pitfalls of what has happened in Europe as the Saudi economy grows, as the Saudi economy evolves, where we can find a good place for capital allocation in circularity. So, I hope I've made a good case as to why circularity matters. It matters to all of us, whether from a financial perspective or from a responsibility for our children and grandchildren. I hope I've talked a little bit about why there are strong drivers of circularity, and particularly in regards to capital allocation in terms of the proposition we're all facing today in terms of where we're investing. And I hope I've not been too depressing about what has happened in Europe and what can be lessons learned and what Europe may be able to fix, but I think what Saudi is doing better. So circularity needs capital allocation, it needs investment, and I hope I've made a case that that investment can be supported. I'm being told I'm wrapping up. Have we got time for Q&A, or are we? Any questions, guys? No, must be a perfect presentation. Oh.
Thank you. You mentioned that the number of smelters are declining in Europe.
Sorry.
The number of smelters in Europe is declining.
Yes.
Is there a major reason for that? Is the energy cost? Is it the what's the main reason behind that?
So I'd say it's almost a collapse rather than a decline. So it went from nearly 30 to, on that data set, 11. I think it's more like 6 or 7 today. It's a whole range of factors. As you say, energy costs. I would, being somewhat cynical, I would say that the old adage that America innovates, China replicates, and Europe legislates. There is a lot of legislation in Europe that is prohibitive to investments. I used to own and run Europe's largest aluminium smelter, and actually moving it forward in terms of optimization of industrial growth was a real challenge. We had a core focus on monitoring our carbon footprint and making sure that our customers understood that we had a premium product, but it came at a higher cost. But that higher cost is not reflective in any product premium as of yet. So if you have a higher cost position and you don't have a product premium for that greener and lower carbon material, it's very hard to operate a smelter.